Welcome to our CSEE news in February 2024. Today we report on key construction to estate figures about all the CSEE countries in Central and Southeast Europe. And our episode today particularly is about these construction to estate trends in 2023 in Poland, covering all asset classes. We start with logistics. According to a report by Newmart Polska, development activity across the EU continued unabated, with more than 20 million square meters of modern warehouse and industrial space coming onto the market in 2022. Poland topped the league table with close to 4.4 million square meters. Germany and Czech Republic also reported high supply levels, over 2 million square meters and 1.1 million square meters respectively. Poland is also in the focus of terms of demand. In the era of nearshoring and friendshoring, countries with substantial land banks such as Germany, Poland and France have a strong growth potential. In 2022, the take-up of warehouse space across the core EU markets total more than 35 million square meters, only around 5% lower than the historic peak recorded in 2021. Last year, most of the surveyed markets reported the second highest result for occupier activity since records began. Germany took the lion's share of the total take-up, excluding renegotiations, accounting for 24% of all leasing activity, followed by the Netherlands and Poland, around 30% each, says Agnieszka Giermakowska, Research and Advisory Director at Newmart Polska. Despite rising project financing costs, developer activity remains relatively strong. At the end of 2022, warehouse and industrial stock under construction amounted to almost 25 million square meters, of which close to 90% is scheduled for completion in 2023. In addition, nearly 60% of the space volume under construction has already been pre-let. Some European markets are increasingly experiencing a shortage of land for new warehouse development. This is most notable in Scandinavia, where the overall vacancy rate is below 2%, and in some Central and Eastern European countries such as the Czech Republic, around 1% vacancy, and Austria below 0.5%. In 2022, rents continued a trajectory of strong growth across European warehouse markets, rising by around 15% year-on-year and by 40% in some regions, especially for urban warehouses in such cities as Rotterdam, Munich, Berlin, London and Prague. At the end of the fourth quarter of 2022, the highest rents were in Finland, 12 to 13 euro per square meter per month, Norway 11.5 up to 13 euro per square meter per month, Germany 7.5 up to 9.5 euro per square meter per month, and the Netherlands 6 to 9 euro per square meter per month. At the other end of the spectrum were warehouses in Central and Eastern Europe, including Poland, with warehouse rents of 3.5 up to 5 euro per square meter per month. Financing in the is the word of 2023 in terms of activity for developers who have had to deal with banks' increased requirements for collateral for pre-leased agreements. Equally important in the context of the year as a whole was again meeting ESG-related guidelines. Bank analysts note that Poland differs from the other Central Eastern European countries regarding the number of decisions denying loans due to failure to meet ESG criteria. The industrial market in Poland is entering another phase of maturity in which the previous group of 5 major regions has been expanded to 8, including Warsaw and its surroundings, Lodz, Upper Silesia, Greater Poland, Lower Silesia, and the areas of Szczecin, Tricity and Kraków. Particularly noteworthy are the last two markets, the relevance of which has increased in recent years and have exceeded the thresholds of 1 million square meters of total stock. In 2023, weakened take-up resulted in fewer speculative projects, which share of space under construction has fallen from 61% in Q2 to 53% in Q3 2023. Given the more significant requirements for obtaining financing, it is expected that this trend will continue in 2024, and the share of projects without signed leases in new supply expected to decrease by the end of the first half of 2024. It is expected that the Polish industrial asset sector will witness a two-speed market. The first group will be funds interested in so-called prime assets, with the lack of high-quality products heralding another phase of waiting for a better moment and as a result few transactions. The second group, on the other hand, will include distressed owners and value-add projects sought by opportunistic investors. In 2023, a new deal with a retail company for 120,000 square meters at the OUBS, Chelets, was signed together with a lease of 110,000 square meters by Reben at City Park, Warsaw West, with Kitki. The regions with the highest tenant activity are likely to become the Mazovian, Silesian, and Lower Silesian voivodeships. The industrial sector again leads Poland's investment market in 2023. The year's transaction was the acquisition of an 80% stake in 7RSA by a Scandinavian investment fund and REP. Related to the retail asset class in Poland, we can underline the following trends. Mergers and acquisitions on the retail market in 2023 saw a lot of M&A activity. Sportsdirect.com Poland became the new owner of the Go Sports store chain. Ukrainian company Epicenter K became an investor in Intersport Poland. Benefit Systems announced the acquisition of 16 clubs owned by Calypso Fitness, and Lagardère Travel Retail became a franchisee of 141 Costa Coffee stores in Poland and 11 in Latvia. Developer activity on the retail market. Developers are now focusing their activity on small convenience type facilities located mainly in smaller cities. In the first 3 quarters of 2023, 73% of the new supply was delivered in retail park formats. Some of the retail parks that opened in 2023 were built based on Tesco stores that closed in previous years. In 2023, retail parks accounted for 80% of the new supply, while shopping centers made up only 15%. Closures included 4 shopping centers and an outlet center in Bydgoszcz. At the end of 2023, there was approximately 370,000 square meters of retail space under construction and scheduled for opening in 2024 and in 2025. Schemes in the pipeline sized over 5,000 square meters include 27 new projects, 21 retail parks, 4 shopping centers, and a design outlet center in Krakow. In addition, there are 9 extensions underway. All 3 retail sectors, shopping centers, retail parks, and high streets, posted positive average rental growth in 2023, with the strongest year-on-year rise of 12.5% recorded in Q4 2023 for retail parks, compared to around 70% for shopping centers and high streets. These figures are for prime retail schemes, having the strongest position in their respective local markets. And we move on to the office asset class trends in Poland. 2023 was marked in Poland by a shrinking office development pipeline amid a continued focus on the optimization of office footprints and overall office running costs. It was also another year in which both tenants and developers faced relatively high office fit-out costs. In addition, high borrowing costs were a drag on expansion, with caution being a key theme characterizing the Polish office market, says New Mark. New office supply in Warsaw for the whole year 2023 is unlikely to surpass 70,000 square meters, the lowest level in the history of the Warsaw market, while regional cities continue to see more and more office completions. The volume of office stock under construction in Poland's key regional city markets has notably declined. At the end of 2023, it's approximately 350,000 square meters, down by nearly 40% compared to 2022, and by almost 70% from nearly 1.1 million square meters as compared to the peak year of 2017. Savius estimated that Poland's total office stock will surpass 12.8 million square meters by the end of 2023. As a result, 2023 will be remembered as a year with the lowest ever level of new office supply in Warsaw, with a decrease of around 70% compared to 2022, and a year with the second lowest new supply in regional cities in the last decade. Development activity is not expected to gather pace until 2025. In the first quarter of 2023, developers focused on regional markets in Poland. Kraków, Wrocław and Tri-City have been enriched with new office spaces. Meanwhile, no new office buildings were built in Warsaw. Current interest from tenants remains at a fairly high level. Demand recorded in Q1 2023 was distributed proportionally to the Warsaw market and regional cities. The challenge facing the office sector is rising service charges. The total supply of modern office space in Poland amounted to almost 12.73 million square meters at the end of Q1 2023. On a standalone basis, Warsaw is the undisputed leader compared to the other cities in terms of office space. Nevertheless, regional markets are gradually developing, and in 2022, the total supply in regional cities exceeded the supply in the capital for the first time in market development history. Among regional cities, the largest resources are available in Kraków, with 1.75 million square meters of office space, Wrocław 1.31 million square meters, and Tri-City 1.02 million square meters. In Q1 2023, demand for office space was recorded at approximately 330,000 square meters. The signed lease transactions were distributed proportionally to the Warsaw market, 48% of demand, and regional markets 52% of demand. At the end of Q1 2023, total office stock in Poland's core regional cities, Kraków, Wrocław, Tri-City, Katowice, Poznań, Łódź, Lublin and Szczecin, stood at 6.47 million square meters, says Savius. According to the latest report from the advisor, Poland has 3 regional cities with over 1 million square meters of modern office space each: Kraków, Wrocław and Tri-City, and another 3 with over 0.6 million square meters each: Katowice, Łódź and Poznań. So in the first quarter of 2023, the supply of new industrial and warehouse space in Poland hit an all-time high of 1.9 million square meters following the completion of projects that had been launched in more favorable economic conditions and amid record high occupier demand. At the end of the first quarter of 2023, the combined office stock in Poland, of Poland's 8 largest regional city markets, Kraków, Wrocław, Tri-City, Katowice, Poznań, Łódź, Lublin and Szczecin, was close to 6.5 million square meters. In addition to companies from Ukraine, law firms, accounting and tax companies and IT companies are also very active in searching for office space. They are currently developing most dynamically. Due to the nature of the business, most of these clients are interested in an office located in the city center. It's Jakub Potorki, senior negotiator office agency Axi Imo. Related to the regional markets, the first quarter of 2023 witnessed a further decrease in the developers' activity with around 530,000 square meters under construction, down by over 8% since the fourth quarter of 2022. Also related to the regional markets, in January-March 2023, there was only one lease signed over 10,000 square meters in the regional cities, with all the other deals being agreed for under 5,000 square meters of office space. The sectors that generated the most demand were IT and manufacturing, which accounted for 25% and 13% of the total take-up respectively. Logistics came third with 7%. Broken down by transaction type, new leases accounted for 45.7% of all deals agreed in the first quarter of 2023, with negotiations and renewals having a similar share of 43.8%. The remaining 10.5% came from expansions, which has a share of 6.5%, and unoccupied transactions 2.8%, pre-lets 1.1%. Companies are increasingly downsizing their offices as a trend in Poland. The average new office lease size in Warsaw has been shrinking steadily for the last 3 years, from over 1,000 square meters before the pandemic to approximately 800 square meters in 2023. Instead, some tenants tend to opt for a higher standard or better location. Due to supply constraints, companies looking for an office can take advantage of sublease options, many available at bargain rents, or the growing supply of co-working offices, comments Jaroslav Piłcz, head of office agency Tenant Representation Service Poland. And some trends related to the flexible offices in Poland. Poland's flexible office market has been growing steadily and has recently surpassed 320,000 square meters. Such space is available in modern office buildings as well as in tenant buildings, banks, shopping centers, and private homes. Clients very often ask whether a building also has serviced offices, so that they can expect it if necessary, work on short-term projects, or hold a larger event or meeting. Demand is huge, and most co-working and serviced offices reach occupancy rates of close to or above 90%. Around 70–80% of such office space is leased before it is officially launched. Flexibility is in demand. This has also been noticed by investment funds and developers, who increasingly offer ready-to-occupy offices in their buildings for 6, 9, or 12 months. However, these don't go along with service packages typical for flexible offices. The fastest growth in flexible workspaces is in Warsaw, Kraków, and Wrocław. There's naturally strong demand for such space in city centers and in modern buildings, and in Warsaw close to metro stations. Typical flexible offices in smaller cities are sized between 800 and 1,000 square meters to meet local requirements. By comparison, large cities offer units with an area of several thousand square meters, sometimes spread over more than just one floor. The amendments to the Labour Code on so-called remote and hybrid work, announced since the COVID-19 pandemic, has influenced the consideration of the model of operation of new forms of employment and the definition of rules and requirements for employers and employees. As of April 2023, many companies permanently, and taking into account the legal provisions, have switched to a hybrid work model, combining stationary work with an individual determined rotation system that considers the employee's presence in the office. Nevertheless, even before the law's amendments, tenants' first decisions were visible. The widespread of hybrid work, among other things, influenced the optimization of space and the evolution of office space towards more diverse and flexible workspaces, including zones for collaboration or individual work. Nonetheless, the cost of arranging space has increased due to the rental market, among other factors, but also to an increase in the price of materials needed to furnish an office. Currently, the cost for the so-called shell and core space fit-out in Warsaw ranges from a minimum of 500 to as much as 1,000 euro per square meter and more, depending on the office fit-out project and the length of the contract. PropTech, or combining real estate and cutting-edge Internet of Things solutions, for example, in 2023 introduced several applications for moving around office buildings. The most popular solutions that property owners opted for were the contactless selection of the floor to be driven to after programming, automating license plate reading, and remote parking space selection or desk reservation in co-working areas. Implementing intelligent building management systems that optimize energy consumption, control air conditioning, and support office space management allows for large savings. And finally, some words and trends in the hotels commercial asset class. According to Trends Radar, demand on the Polish hotel market has been on a steady upward trajectory in recent years. For example, in 2022, the number of nights rose by 23% year-on-year, while 2023 finished with an increase of 5% year-on-year. These positive trends have been mostly driven by the increase in domestic demand, while a recovery in the number of international nights is expected in 2024. Next year, the number of nights sold in Polish hotels is expected to surpass the 2019 level by 7%. Next year is current year, 2024, says Maciej Prączuk, hotel market expert at Cushman at Wakefield. For the recovery in the Polish market, hotel market will also largely depend on an increase in business trips, while Oxford Economics expect business demand in Poland to bounce back to pre-pandemic levels in 2027. There are signs this might be notably earlier. If you would like to know all the figures in all asset classes in Poland and all the other Central and Eastern European CE6 countries, Bulgaria, Czechia, Hungary, Slovakia, Romania and Poland, check out the latest edition of our Bulgaria and SCE PropTech mapping report, which has just been released. You can scan the QR code that leads to the report landing page, or reach it out through the link in the first comment below. Check also the SE news on the other 5 countries. See you soon. Bye.